I'm joined now by Chris Scicluna, who is the Deputy Head of Economic Research at Daiwa Capital Markets. Thank you very much indeed for joining us today. Now, this move into growth should be seen as positive, but there are still some risks to the downside for Japan, aren't there?
Oh, absolutely. There's countless risks to the downside in Japan, but yeah, let's embrace the positive to start with. I mean, it seems odd to talk about a recovery in Japan, given that we have GDP data out next week, which are likely to show a substantive decline on the quarter.
Yes.
In Q2 of more than 0.5% on the quarter, and that would be the third consecutive quarter of decline in output. But of course, that partly and that largely reflects the sharp contraction back in March in the wake of the quake. And since then, we've had 3 solid months of growth in production and a couple of months of growth in exports. So very much we're looking at growth for this third quarter of the year. Looking at the risks, however, as I say, they're countless. You know, on the domestic side, we still have sentiment that's impaired by the quake. We have this cultural phenomenon, perhaps, called jishuku, voluntary self-restraint, which suggests that many people in Japan still feel somewhat uneasy about spending money in the wake of such a horrendous natural disaster. We also have ongoing disruption to energy supply, unresolved issues to do with nuclear power generation and the dependence on imported energy from overseas. But as you say, the big one at the moment is the exchange rate, the yen, heading towards a new post-war high, and it's, unless we get coordinated intervention from the G7 again, which certainly seems most unlikely, the yen is going to continue moving higher. I mean, already the yen is about 8% more than companies were expecting a little more than a month ago when the BOJ conducted its most recent Tankan report. If it remains at current levels, that's going to knock something like half percentage point off growth next year. And of course, the further it moves higher, the more that's going to undermine competitiveness and take a big chunk out of the reconstruction-driven recovery.
Indeed. Now, when we look at we've looked at the Swiss franc already today and seen the impact that it had on Nestle. When we look at what's happening, as you mentioned there's unlikely in the current climate to be a coordinated effort from G7. On its own, how much power, how much firepower does Japan have to help that exchange rate?
Well, the intervention we saw last week of about 4.5 trillion yen's worth, you know, that was a record daily intervention. It accounted for about 15% of daily turnover in the Tokyo foreign exchange market. But we've seen in the past, back in 2004, for example, that Japan intervened over the first quarter of the year by a lot more than that, by more than 3 times that amount. And we certainly wouldn't be surprised to see the Japanese authorities moving again and again, far in excess of the extent of the intervention that it conducted back in 2004. But will it have an effect? Well, to be effective, really, you know, foreign exchange intervention really needs to be backed up by substantive monetary policy measures, further easing by the Bank of Japan. We saw a token effort last week by the Bank of Japan in terms of, for example, additional 5 trillion yen increase on its asset purchase program, but that's less than 1% of GDP. And really, you know, the more intervention we see from the finance ministry, the more we would like to see that matched by asset purchases by the Bank of Japan to make sure that it's not sterilized.
Right. Now, we touched on the horrific events, the personal human cost and the tragedy that led to the contraction with the horrific earthquake. When we look at how Japan plans to rebuild, we also have to take into account how on earth it's going to finance all that. Are we any closer to knowing?
Well, that's the big question. I mean, it seems to me clear that everybody knows how it ought to be financed. Given that Japan's government debt stock is the highest of all major economies, you know, upwards of 200% of GDP, really that has to be financed through higher taxes. And the obvious source of higher taxes in Japan is the consumption tax, which at 5% is the lowest of all major economies, whereas actually other tax rates are very high in Japan. Corporation tax and income tax in particular. So it's obvious that an increase in the consumption tax has to come, but as we know, politics are very difficult in Japan. You know, we're not even going to get a proposal in that direction, actually, and probably we have a new Prime Minister in place, and we have great uncertainty over that likely to be resolved in the autumn.
Okay, Chris Scicluna, thank you very much indeed for shedding some light on all of that for us. Thank you.